Hey there, traders. This is a recap for Monday, March 3, 2025. You can see that it's the next morning, March 4. Very busy day yesterday. Didn't have time to make this. Hopefully, I can have this done and put out before the market opens today. So just run through this pretty quick. So there was a pretty big down day. The bulls did not have a good showing. So after Thursday, we talked about this area. They came down to this breakout area, right where the close was on Thursday. And it wasn't surprising that Friday they came down, almost filled this gap here, and took off. So what could have been expected, considering the timing and everything else, where they were, that they could have come back and retraced a little bit and then busted through. Actually, the trend line was right here. Busted through that trend line, got above this. That was something spelled out in the game plan, which is pretty important. We need to look at that because we talked about early in the day that if they can get above this whole zone area, there was two trend lines and a level up here, which is really the 50% retracement of this entire move, then the bulls could keep going higher. They started to pull back, but then they just gave up and kept going lower. So, they filled this gap. They got down here to the close and then pull back up, but still kind of closed bad on the day. So this is a pretty big down day considering that they had an opportunity to go higher. So this doesn't look good for the bulls. This could be that just this whole thing could be a fake out and they weren't quite finished with the downside, and now they are, and today they'll go up. But when we get to the 1 minute chart, I'll show you what they did at the end of the day all the way through right now, the next morning, which at least at face value doesn't look too strong. It's important to read through the notes for yesterday. These are the levels. There's a screenshot here below. The trend line's right on either side of this 597.85. If they can get above the trend lines, then the bulls could go higher. That's what was needed. But if they went lower, the next level down was 590.20. If they got below, the bears could have an easier time fighting the bulls down there. We would expect large moves as they continue to battle at these important levels. But basically, if price would get below 590.12, then price could fall in a bigger way. So those were kind of the lines in the sand. And because bigger moves and bigger swings were expected, more wiggle room would be allowed. In other words, I wouldn't expect precise bounces at the levels like normal. So these are the type of things we had in mind going into the day. And what did they do? They opened, went up, touched the lower trend line, which we just looked at, and fell for pretty much the rest of the day. And when they got below 590.12 right here and established some bearish sentiment below, that's when they really fell. Just as we said they would. In the meantime, they had pretty big swings and battles at these levels. So where were the trades? I looked at a few things throughout the day, but I was in meetings pretty much all morning. Then I had a little bit of traveling to do in the evening, so I didn't trade anything. However, if you would have waited for the 9:45 candle or the 15-minute window to open, it would have been coming down into 594.10. 594.15 would be the trigger point. Doesn't look like much here, but they bounce like 5 points or so here. So there's your 4-point base hit right there. They got under this pretty quickly. Could be a sign earlier in the day that it was pretty weak. So enough time went by. They came back up into this level again from the other side. If you went short here, you would have been rewarded with a short trade. So there's trade number 2. So recycle trade. So really this level, you're not going to do anything again until they get down to 590.12. If it were me and I saw them down here at 590.12 in the middle of the day, instead of getting back up to this zone and fighting this zone, I'd want to see what they would do with 590.12 first. But let's just say you went long at the level, or 590.17, that's 5 cents above the level. Then they got under this thing, and you would have had a fumble at right about 20 points or 20.5 points, 20 and a half, and reversed, and would have had a base hit on the reversal. So a little bit of a wash, but unfortunately, holding on to that and playing by the rules, waiting for that signal, we would have lost quite a bit. A recycle trade on the short side could have happened here when they went up to 590.12 or the 5 cent buffer, but they came up close enough and pulled away to where you would have said, okay, that might have been a short trade. Do I want to trust it again? So I not necessarily would have taken this. I'm not going to count it the next time it did work, but that near miss would have, by the rules, would have put future attempts off the table. But their inability to get back above 590.12 was the clue that the bears were in control, as we said in the game plan, because if they were to get below this level, then the bulls were losing. So when they got down to 585.60, they acted like this level wasn't even there. And once again, seeing what they did up here should have given you pause to trade on the long side at 585.60. We'll go ahead and count it. There was nothing good about this trade at all. Quickly, a max loss limit was hit, 20 points in the red. So when they got down to this level here, your 5 cent buffer would have put them within that 10 cent threshold before they bounce. You would have considered that the trade. Not taking it over here, so unfortunately, no trade there, although they did bounce eventually, but we can't count that for a base hit. That would have concluded your trades for the day playing by the rules, and you would have ended in the red. We'll jump to the tracking log. You can see playing by the rules would essentially been 12 points, but over 40 points given back because of these big swings and getting out before things got worse. And of course, as we know now, it was the Bears in control for most of the day. But you can read the notes and see what that looks like. And here are the levels that were hit, but no trades taken for me. And you can see we're looking at March at this point, although the metrics are tracking everything this year so far. One more thing I want to show you, though, since we are in the morning here. So if I turn on the extended hours or the 24-hour session here, so after they closed, they went right up to this level. Remember, they ignored it here, 585.60. You would have, if you would have gone long there, it was one of those times where it just did not work out well. But you can see the level is important. I just want to point out it went up in the post market. This is the overnight session. So here's 4 a.m. or so Eastern. They had been below this thing, hit it a few times, couldn't get above it. So it looks pretty weak so far at this point. And this is where they're at currently at 6:35 a.m. This level wasn't arbitrary, had importance. This is one of those times where the momentum and the bearish sentiment at that point in the market was just too much for the bulls to handle. And it rendered that level pretty much useless the way we trade them. It happens sometimes. So thanks for watching. I'll talk to you again soon in the next recap. Have a great day.